Hello and welcome to India Market Open. As we gear up for trade this morning, guys, it's a tussle between the bulls and the bears, and it's a good fight for whatever it's worth.
It's a tussle between India inflation and US inflation as well. In some sense, US inflation is behaving like the India food inflation. Let's see what happens there too.
US inflation has been largely in line with expectations. I mean, you saw global markets respond positively.
I think just easier to ignore everything and just move on.
Maybe that too. But just the fact that it's coming in like the India food inflation, just slightly higher than what people anticipate every single month, before maybe at some point of time cooling off.
Yearly, but the monthly, the Feb data in line, yearly slightly higher, core slightly higher. So those pain points that everyone is now maybe pricing in.
Yeah.
And India inflation as well. We've been living with higher food inflation for a while. But quick look at global cues, which have been good. Mood has sort of turned, at least as far as Wall Street is concerned, and the mega cap tech rally is back in force. So sharp rebound in US stocks. The S&P 500 ended up at a record close. Nvidia back in its mojo, about 7% up. We're showing you the Dow futures, but the S&P 500 was also up. Nasdaq, of course, had a great run as well in the US market. So the core of it, of course, is the Feb inflation data, as Niraj was talking about as well. So let's look at what happened there. 0.4% monthly rise in Feb was expected. 3.2% year on year, slightly higher than what was expected. 3.1% was penciled in. The big problem really is that the Fed wants 2%. So you're still a ways off from there. And that is perhaps where the trepidation is. A Fed extension or a delayed rate cut or start of the cycle is already penciled in. But look at what's happening with the 10-year as a result. So that has inched up definitely. 4.14% was the rate when I checked last. So that is responding in that sense to a later rate cut as far as the Fed is concerned. Just quickly want to pull up Asia, which is mixed. Not too positive cues over there. Shanghai is down, Nikkei down also because their corporate inflation has run hotter than expected. So that means they're well on track perhaps for a rate increase after a long time, might move out of the negative territory. So Asia cues are mixed as well. And I think no great direction as far as we're concerned either. Stock specific, sector specific. Overall, the worries seem to be there, whether it's concern of regulatory action or what's happening in the broader market, small and mid-cap space.
Hit the nail on the head. And here's the data, right, guys? Just look at the Tuesday return or the 5-day return for the key indices. We're not even getting down to specific stock, but just the key indices. Nifty flat for Tuesday, 5-day return flattish, no problems there. Mid-caps participated yesterday, 1.31% lower. 2% lower on a 5-day basis, but look at the small cap and look at the SME IPO index. It just tells you the story really. 5.58% in 5 days versus flatlining for the Nifty, and then 8.23% for the SME IPO index versus flatlining for the Nifty. Even the micro cap index would have had a similar performance between the SME IPO index and the small cap index. So that's where the pain seems to be, that the broader end of the spectrum, and which is why maybe portfolios are hurting. I mean, I don't know if you guys have spoken to any dealer or any person that you speak to off late. The conversation is just that there's just this lack of buying, which is leading to pain in the portfolios somehow. So
no, and the thing is, on the way up as well, there was underperformance on a lot of these portfolios, right? But for some obvious reason, on the way down, it's portfolios that have a higher sort of reaction to these small and mid-cap stocks selling off. But I think the good news is passive funds in the large cap space might actually finally start doing well again, because that was the trend
back to basics, basically.
Up until a year ago. And talking about IPOs, look at how disappointing RK Swami's listing was yesterday. There was some euphoria around that one, but given the larger market sentiment, the stock debuted with a 13% discount. I haven't seen, and I'm calling it disappointing because not too many listings in the recent past have been as disappointing.
little action. That was
Is that what you're
expected.
attributing it to?
The wind has been taken out of that sale
Yeah,
completely.
and I think there are some concerns regarding maybe working capital, maybe competition. R.K. Swami also comes from a space that's not often seen in the listed space. It's a marketing company. Also, apart from that, a quick mention of Bharat Investments before I toss it back to you. There was so much excitement and euphoria around this InvIT, and for good enough reason. I mean, the yields there are genuinely attractive. It is definitely a product that gets recommended in a whole bunch of portfolios because of the regular income and appreciation that investment opportunities like this give. But Bharat InvIT as well listed pretty flat, 1% higher is where it opened, finally went home with a 3% gain. But I guess we shouldn't be complaining. Given that the larger market wasn't doing too well, this one had it okay, I'd say, at best.
Yeah, and probably will be steady because as an InvIT or a REIT would go, they will not have really large moves like a real estate space would. But, you know, frankly, just the lack of buying, just exacerbating the kind of impact that small volume selling as well. Yesterday I was talking to a broker at a cafe, was talking about how volumes at his brokerage have just kind of disappeared. I mean, people are not coming out to buy, and I think therein lies the problem at the broader end of the spectrum, because some of these stocks are not very expensive, the growth stories are promising, but there is no buying, and therefore small degree of selling leading to the kind of falls that we've seen in some of those.
Very quickly, Niraj, if there is no buying, where is this money going is what I'd want to know.
No, as in the pressure of selling.
Is it moving to debt? It'd be interesting to know.
No, just the pressure of selling in some of these stocks is just so high that the ones which have run up the most.
Profits off the table.
Very likely that would be the case.
I was going to ask which cafe.
Yeah, I was tempted. That was which cafe was this?
Okay.
You meet startup founders
Only
and
at
market
cafes,
men at cafes for sure. Yeah.
Okay.
But so one, the lack of buying. Good question, by the way. One, the lack of buying. Two, today I saw in an MK note that the Naukri Jobs Peak Index for IT services has now been on a downswing for 14 consecutive months, highlighting the persistent weakness in demand. So, frankly, if you believe that this is a lead indicator, good chances to say that, you know, hiring from companies is a bit of a lead indicator when it comes to IT services, or maybe the demand commentary, but let's assume that lead indicator is hiring, in which case, as of now, there's no lead indicator to believe that demand could be turning back on the horizon, and therefore, watch out for IT. And real estate, I'm saying this very, very consciously, that real estate is behaving like real estate. I know the line has been subbed by my editor, but real estate is behaving like real estate. And the reason I'm saying this is because it's a very volatile index, and typically performs on the upside, underperforms on the downside in a big way. And that is, I think, what's happened yesterday at least. We'll talk about that in detail a bit later on. But very likely, from whatever little I hear from dealers, likely to see buying at lower levels. So watch out for this index as well. 3.5%, really deep blow, right on the chin. Let's see if it recovers.
That is the Realty Index, 4% cut. So it's a big, big sell-off in trade yesterday. A quick word on inflation before I talk to you about all the stocks you want to watch out for. Inflation number, the headline number, came in line with what the street was expecting. It also came within the comfort zone of the Reserve Bank of India, which is in the range of 2% on the downside and 6% on the upside. Vegetable prices have actually gone higher despite a seasonal element here. Remember, seasonally, this is the period of time when you see a decline in food prices. What catches my attention is that core inflation continues to come off. Now, I know economists, policymakers may view this differently, but the fact that your core inflation is declining so quickly could become a matter of concern, indicating that the economy is shrinking more than one would like. So you don't really want to go into that space either. But for now, the headline inflation in line with street expectations. The April policy, the RBI, is expected to be pretty much status quo like we saw last time around. But moving on from inflation, which turned out to largely be a non-event, or the market chose for it to be a non-event in yesterday. This all will choose to make it a non-event this morning. It will once again be about stocks, and again this morning, my top stock to watch out for is ITC. We talked about this yesterday. We talked about this a few weeks ago, but the fact remains that BAT is finally going to be batting out of ITC. They are paring their stake by 3.5% out of the 29% stake that BAT holds in ITC. BAT clearly taking advantage of the fact that Indian equity or valuations for some of these large Indian companies has skyrocketed, and taking some profits off the table could be the need of the hour. Well, the price band for this is anywhere in the range of 384 to 400. The lower price band coming in at a 5% discount to yesterday's close. Largely speaking, while there could be a supply overhang, most brokerages are actually optimistic on ITC, and they believe that the fundamentals remain intact, and this marginal exit or BAT from ITC will only have a sentimental impact in terms of a little bit of selling pressure in the near term. But the long-term story of ITC continues to remain intact. Mutual funds, passive funds will have to go back and rejig their portfolios. So that's one more thing that we will see playing out over the course of the next couple of weeks after BAT pulls out the 3.5% stake. The stock more than likely will see some selling pressure in today's day of trade. It's down about 11% in the last 3 months, making it rather attractive for most brokerages. Well, beyond ITC, the two other ones on my list this morning are Vedanta. The quantum of number there doesn't seem too big, but the news that we have is SEBI has ordered Vedanta to pay Cain 77.62 crore rupees for a delay in dividend payment. SEBI has also gone to the extent of telling Vedanta that they cannot access the markets or capital markets to make good that payment to Cain. The stock, like I said, 77 crores is not a huge sum of money, but coming straight from their balance sheet could be a sentimental negative on Vedanta. The other one, not big news here, but nevertheless worth a mention, is SRF. This member was or has been a trader favorite for quite some time now. The latest update coming in from the company is that they're incorporating a subsidiary in the Middle East for trading in refrigerant gases. So that's SRF. You've also got one new listing. JG Chemicals will list at 10 a.m. this morning, so keep an eye out for that too, guys.
You know what I found interesting about ITC, and Samina has detailed it, and elaborated on it, is how brokerages are saying that the BAT exit is now an overhang which is done and dusted with. So that might, take that one cloud away. So you might see a good recovery
in fact,
at some point.
I remember this was maybe 3 to 4 weeks ago when the news broke out just before market close.
Yeah.
You saw a massive cut on ITC, and I think everyone, what they sold, said, you don't need to worry about this, right?
Correct.
While BAT may do this, it actually means nothing. And it's not just ITC. With the way valuations of Indian companies have gone up in the last 8 years, it's only a matter of time. You've got to start booking some profits,
No
right?
wonder, yeah, and BAT has debt on its books. It needs to, sometimes you need to sell the family silver to make up. Nothing's happening with the cigarette business. The non-cigarette business is, steadily rising. So ITC will be an interesting play. I just want to put Oriental Rail Infrastructure on your radar as well. So a slew of orders, total orders of 1,249 crores from Ministry of Railways. Now, I know rail stocks are sort of out of fashion at this point, but the fact is that those order books are steadily increasing. So there's no change over there. Also, in this case, the order quantity has been increased from 2,964 to 3,055 wagons. It's a specific kind of wagon. It's called the Box NHL. It's a steel wagon, and the delivery period of the increased quantity is till August 2024. So I thought this was interesting, and we should watch out for Oriental Rail Infrastructure. The order execution timeline they've been given is 39 months, and the market cap is about 1,300 crores. So one that you can put perhaps on your radar. Signature Global is another one, and we were talking earlier about real estate. The index has been hit. The fact is fundamentally that upcycle continues. So you have to watch what's happening in real estate in the broader picture of the market mood. So Signature Global has launched a new project, Orchard Avenue 3 in Gurugram. I think has quickly become the hottest destination for new launches, leaving Mumbai, Pune and Bengaluru behind. It's under the affordable housing policy of 2013, and it has 235 units, areas about 1.66 acres. So this is slightly different, where the focus has been on luxury housing for a lot of players. This is a project under the affordable housing segment. And just one more, Cipla. So Cipla had a rough afternoon yesterday in closing trade. They've had a bit of positive news this morning because they've got a tentative US FDA approval for a Selexipag injection. This is, controls hypertension. But the Philips Capital report will see perhaps some of an impact today as well. It's an important one. They have a concern of about 12% of earnings because they've gone back to Exim data, which is showing that there is no export of albuterol sulfate from their Indore facility. This is following a warning that Cipla received in November last year. And since then, there have been no exports of this particular drug, which is a respiratory asthmatic drug. They have reiterated a sell call and a target price of 11.50 on the stock. So quite a bit of downside from the current market price. And that's because if supply disruption continues, the negative impact could be up to 12% on PAT. So we have to see whether this tentative US FDA approval actually balances some of that pain on Cipla. But Cipla is a stock that I would definitely watch today.
Most certainly, watch out for. A couple of other interesting ones today. Bharat Forge or RK Forgings or Samil or Forgings, any of the forging companies, keep them in mind. Industry consultant ACT Research has released an update on forecasting for the North American Class 8 truck sales. Now, why is this important? Because ACT has raised the 2024, at least, the 2024 NA Class 8 retail sales estimates to minus 9.6%. The previous one was minus 14.5%. So there is an uptick in the 2024, which is the near-term estimates for Class 8 truck sales. Because this updated forecast is on better than expected order trends over the past few months. So good order trends over the past few months, that leads to a bit of an uptick on the near-term forecast, which might be construed positively for some of these. Because as per a Morgan Stanley note, Class 8 segment contributes to about 16% of Bharat Forge standalone, as well as 7% of Samil's, which is Samvardhana Motherson's consolidated FY24 top line as well. So this is meaningful, guys, for both of these and the others. And it'll be interesting to see whether this is a dependable statistic and whether the companies themselves are seeing some bit of an uptick or no. Because I remember back in 2023, Forgings was first of the block saying that European Union replacement demand will ensure that forging demand is strong. It hasn't quite played out that way. It'll be interesting to see if a company or two echoes this, what ACT, which is the industry consultant, has said. So watch out. Maybe there could be a bit of a reaction to some of these stocks in the session today. Maybe. And of course, they've spoken about how aside of factors like strength in Mexico, etc., they have essentially decided that pre-buying or fleet buying certainly is a factor. The second one on my radar is Jubilant FoodWorks. Now, they did a con call for a post-acquisition update on the Turkish and the Bangladesh acquisition, and a lot of interest around the Turkish acquisition simply because of how the Turkish lira is behaving and how the Turkish economy is behaving. Now, brokerages have come out and given their verdict on the con call. Macquarie says that clarity is needed on growth and currency risks with markets like Turkey. And Macquarie cited a risk to EPS estimates due to continued demand weakness in India, in addition to what Jubilant is trying to do. And for most brokerages, I mean, Morgan Stanley still maintained their equal weight in the morning note, but nothing extra. MK has a sell with a target price of 400. Macquarie has an underperform with a target price of 320 relative to the current price of 445. So do watch out for Jubilant FoodWorks amongst other stocks in the session today. A couple of stocks which I thought were interesting in addition to the stocks in news that both Samina and Tamanna have highlighted. Anything else, guys?
No, I think that would be it. It's an extensive list, but lots of block deals as well, which we can eventually take you guys through over the course of the next couple of minutes.
I'm excited to know how you're breaking down the real estate story, Niraj, coming up on Editor's Cut, because the kind of suddenly sentimental turn. Is it an interest rate play? Is it a concern about demand picking up, etc.? What are we really seeing?